Hello, 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 everyone. Good morning. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Happy Friday. Oh, boy, I'm glad this week is over. Hopefully next week it'll be quieter. I need a break. Good morning, Patrick. Good morning, Gary. Good morning, George. Good morning, Jacob. Oops, gotta hit the button. Good morning, Jacob. Good morning, John. How can I get those star logos? Well, I'm glad you asked, John. You just become a supporter of this wonderful channel. Rich, welcome. End of year sell off. Are you taking the place of Waka? Where is Waka, by the way? Haven't seen him in a while. All right. Glad everyone is here. If you are new here, please do give us a chance and consider subscribing, ringing that bell, and hitting the like button. Now that that's out of the way. George, so happy next week is a short trading week. Yeah. One day shortened and a half a day on Friday. I wish they were just closing on Friday. Come on. Come on, give us a nice longer weekend. Oh, well. We already had Colin speaking this morning. Not much new said there. Going to keep an eye on Consumer Board leading index coming out at 9 Central. They're forecasting the same as previous, which was be the leading index rolling over. But let's just see if it continues in its negative territory. Then you have the rig counts for oil traders. Pretty green market this morning except for oil and energy. Everything else green, good to go. You can see here energy is the sector that's down. Technology is leading the rally. Then consumer cyclical. Still in rally mode. 80, 20. 50 basis points favored, still in greed. Index, in terms of earnings, I didn't even look at Foot Locker, or there was just not much this morning. I'll peek at Foot Locker after. I'm just interested to see how the sneaker sales are doing from a consumer standpoint. Gamma, just showing it this way. Remember, here's the 4K level. You can see all the gamma right there. 39.50 is the only thing, and that's minor compared to 4K. Right now, we're trading 39.92, so we could see some choppier price action around the 4K area. If we really break down, then 39.50, then the next gamma is 3900. I always expect choppier reversal days. That's generally what happens. Not to say you can't get trend days, but even more so than normal, you end up with choppier, quick reversal days, and we can get wider swings. Here was the negative gamma roughly flip at 39.50. We're trading 39.93, so we're up. We're up in pretty steep positive gamma territory. So you really don't drop below into negative gamma until about 39.50. So that's a key inflection point. Just keep that in mind. Let's see. George is going to take the one day off. It's annoying even when winning. Good morning, Anissa. Good morning, Rams of Fall. So, real quick, we had the Russell, the little old Russell. I just finally hit the last target from that little mini double that we put out yesterday afternoon. Confirmed. And then there it goes. So that is done. Just needed to check on that real quick. What am I watching in the S&P? Well, of course, look at this. The 62.5 from the decline is 39.99. That's just sort of funny with the 4K pin potential. I'm keeping an eye at 4,016.25 to 4,018. Very key little cluster right there. Up to this 4,000. What is the exact number? The 4,016.25 sets up for a minimum potential double top I'll be keeping an eye on. That would be a mini one. So not necessarily trigger for today, but looking at next week, even though historically, besides last year, Thanksgiving week is a bullish week. And don't make short-term conclusions from 1 week. It's just like if I say, usually, more often than not, Tuesdays pull back, and somebody says, last Tuesday didn't. Well, okay. And you got, I mean, I don't trade seasonal biases, but it does have a seasonal bias up. So I'm well aware of it. So I use that as input into the trading, but I will trade a pattern still. Let's see who else is here. Good morning, Sterling. Hey, Maria, happy Friday to you too. 1 hour inverse head and shoulders. It's not for my stuff, Rich. Not reversing a big enough move. You have a shoulder, but it's really not reversing it. You could barely eke it out. I'd just go off the harmonics. It's a little with a this. I'd rather have a cleaner setup. It might just eke out the things, but here's the targets. Use 4K, 4017 if you average those clusters, and 4033, which is a very key level. To the downside, these harmonics are lining up really nice. 3964, 3947 are my first two support levels. 3964 prior, so look at all that support right around that. 3964, 3965 support. Resistance. Pullback would be very key support. And then 3947. We get down this area, I'll be favoring the 3950 pin. It's going to take a lot to get to a 3900 pin. Got to break this support. Yesterday's little support right in here, 3929, and another harmonic. And then you got to break 3911 area from yesterday's lows. So 3900, unless we get some serious downside momentum. But the only thing coming out is the consumer board leading numbers. So I'm not really seeing that. Got to prepare for everything though. Overall, let me just get to a bigger picture. Overall, the magnet is still up here unless we got a really massive rally today, but going into next week, we'll really be focusing on the 200 and the final target from the bottoming pattern. That was triggered back, at the end of October. NAS, after yesterday's little pullback to rotation zone, rotating up today would be an aggressive rotation and %B buy if it does close above yesterday's high only. Key areas besides using the retracement harmonics, just like I was using on the S&P. You got a cluster area between a prior harmonics that I still haven't pulled off because we topped out there. I can update them, but it's about 11,895, 11,900, 11,971, and then major areas 12,047, 12,050. Key support, the harmonics again line up really nice in here, about 11,750 area, 11,676, then 11,602. So I'm going to be watching to see for that, if we get that daily close for that move up, and then the key levels to make a potential double top. Again, that would just be a potential. It has to get to at least 11,971.25. Dow, pretty much the same rotation up. It would be the %B buy on the close above yesterday's high. Watching to see how it closes in relation to this 33,758 level, 62.5 harmonic. I don't need to go through. Major support is 33,485. Lots of selling pressure up here above 34,000. So that's my magnet target for today. Russell, besides the short-term already concluded trade. Sterling, were you in that Russell one? 1884 is major. Minor is about 1873. So let's just get to spiders and the Qs. Again, gap up. So what are we focused on? 397.36 trading. We have this prior open from back on Wednesday. 396.78 will be the first key level support, because with this gap up, we are filling a gap with a gap, but that's going to be the first level support. Then it would be the gap fill. And remember, I'm more keying off the futures. And the magnet price, if we target, would be roughly around that 400. So that's going to be my upside target. And then above there is 402.31. But really focusing on that 400 to the downside, 396.78. Then if we roll over and try to pin the 339.50s, it would be 395.45 area, which would be a backfill to the gap that we're going to create back. And it's not the gap from yesterday fully. It would be the gap from Wednesday that I'm watching first. The Qs. Key support coming about 285.50. I'll use also the gap harmonics from yesterday's close, which is that 284.81 level. So I'll be using gap harmonics. Minor, though, is key resistance going in the open is going to be this 287.50, and a target is about 289. So those a key little target there. Good morning, Andrea. Let me see what else we have. We've gone through all that. I'll get to some other individual things in a second. Notes, pulling back to the rotation zone at 25% harmonic. It could still get a little more pullback with cycles rolling over. None of this invalidates this little double bottom that was triggered. Still hasn't pulled back again to the breakout level. So it's, from my perspective, sit on the hands there. I'm just raising these harmonics because of the bigger pause to watch for additional targets higher. Not much to do today from a short-term perspective. Dollar index still coiling with a little horizontal channel. So that's all I'm keeping an eye on a break above about 106.80. Targeting 107.27. A breakdown level below 105.60 would be targeting the most recent low area again, which is pretty decent support with that 200 right there. The VIX still down so far today. This is going to be interesting with options expiration. It gets a little less predictable of follow through because of the way positions are getting closed. But we should still see going into next week, still favoring a lower push. Again, spike in the rotation zone, spike in the rotation zone. So rotation zone has been holding. Crude, remember I said with yesterday how we closed below the bigger 62.5 and below this close from Tuesday 18th. I said that was the lowest close since back on the 3rd of October. So I was watching a return to this low area. Well, we've already returned there. So at this point, watching for support coming in today around there, but not going to chase anything with crude in the short term with the daily session. What else do we have? Bitcoin still in triangle consolidation mode, waiting for the next shakeout of their Euro, just pausing in front of the 200, caught in a range. Lots of things today are just caught in this range, waiting for the next push. I would not force anything today. If you have a fantastic setup, great. Would not be forcing things. We could get, again, the whipsaw moves. Tesla coming back down, testing this low range yesterday. Key resistance is about 186. Above that, I'm using the harmonics, 189. Major support 170, 180. I'm still expecting it to retest these lows, but it is set up enough for a potential double bottom. What else do we have? I set in Sterling. I set an alarm that didn't wake me up when it triggered. The hourly triggered, so I didn't pull back after. Fair enough. Fair enough. That's why That's why sometimes the futures are nice because hey, you can just get in them and set stuff and walk away. Love when we get a little pullback after the pattern triggers. Yeah, the pullbacks are nice. I agree, Michael. Good morning. Hope everyone has a profitable trading day. Again, don't force anything today. Waka Waka will return when we start trending down again. You're welcome, Michael. Let's see what else. I know we had Sterling put out a GPS. I can never get... You know what? GPS needs to... again, it's already... It triggered the double. Yesterday gave a pullback. And I was not... Sterling pointed this out to me. It triggered even this weekly double. Paused at the 50. Gave a pullback yesterday. And the day before. 2 opportunities to enter this. And now gapping up to look right to the first target. So... I mean, this is a longer term play for a stop raise. Would not be chasing it here at the open, but would be watching for a potential pause and a partial gap fill. Longer term, we could get the bigger gap fill now. Major support coming in at 1284. But that gap did, and I missed this one, did trigger and now has hit that first target holding above the daily 200. Just from a bigger perspective, again, hitting that weekly 50. There's a fair amount of stopping points in here, but this could run with the not a lot of overhead major resistance. It could still run back up for a bit. This is one, especially now that it's hit the stop, this is aggressively raising the stop from my book. Where else? Yeah, nothing shaking on Shakedown Street. Oh boy. At least we got the heart of town. Let's see. All right. My best double trades have all been the pullback to the candle bodies, increases the reward to risk immensely. Yes, and that's why, again, if you don't get, remember, every trade trigger does not mean you got in the trade. Why? Because I've had trades trigger and I can't get proper reward to risk. If I can't get reward to risk, I got to pass on the trade. Doesn't matter if it goes to the profit target, because the key is I got to manage my risk. And in order to manage the trade correctly, I have to know that my reward to risk ratio fits into my trading plan parameters. If it triggers and I couldn't get in it for my proper reward to risk, sometimes something can be put, let's say it was a daily or a weekly bigger trigger, I might be able to do something with some intraday plays. That's why I could still use those key levels to target more micro time frames as it goes towards. But hey, there's trades that trigger that even go to full profit that is like, hey, I wasn't on the train because reward to risk is not there. And the worst thing a trader can do is start messing with the reward to risk ratio. Oh, well, this one's going to work out. I can go less than what I need. You start getting away, and then you're like, well, I can even make it worse and worse and worse. And finally, it starts biting you in the butt because your probabilities times reward to risk gives your trade expectancy. You start eating away at your trade expectancy, and your trade expectancy goes negative. Over the long term, you're going to drain your account. So don't worry ever about missing a trade. There's always another trade. Always. Unless the markets are dead. I mean, completely dead, like closed. There's always another trade. There might be times of very few trades. especially in a low volatility environment, but then you sit on your hands. There might be a time when you get more triggers and you can trade based off your account size or things you can effectively manage. So you're going to have to pick and choose, but you're still going to have to manage your reward to risk. See you, George, in the afternoon. Good morning, Christoph. With oil in the free fall, do you think the markets are about to mimic? I think we're, as I said, watching for these topping areas. I'm watching for, after we complete some more of these bullish patterns, for more topping plays. I think there could be a rug pull, especially after Thanksgiving. I think Black Friday, Cyber Monday results could be disappointing, and there could be more of a run to the exit, but I need the patterns to trade. Because what I think is irrelevant if we don't have a pattern. And you have China cases spreading with oil. If China goes into more severe lockdown, look, we still have the bigger macro pattern. What was this? A return? Weekly rotation zone area rotating down. We still have the macro pattern. We had a little bullish plays in here, and now it could be back into, and if you're a longer term trader, this is still with your at least second and third targets lower with the 200 week in the way. I'm thinking if China goes into lockdown mode, we could easily see a $70 again. Easily. Is that going to tear the market apart? Well, this is a deflationary aspect for oil again, which helps inflation. I don't think this is a negative to the markets. I think it's actually a positive to the markets. What is more is why we're getting there with the potential more severe China lockdowns again. Why would I hate that? Why would I hate it? You know, there's things can be played. They definitely using the conservative targets there. It already hit the first stop target. It didn't trigger on this red candle. This one triggered it after hitting the stop. So these get tricky. I generally like to pass on these after the first target's been hit, if it's at all questionable and I have to filter out trades. I don't, because this did not trigger it. Do not trigger a double bottom on a red candle. Especially this went to first target after. Even if you went with this, even if you went with the aggressive targets, which I would not do in AMC at this point. Look, it went to the first target regardless. This, if I have too many trades on the table, this is a hard pass for me just because of the structure of the way it triggered. Now, this first target area can definitely be used again, and if I was going to structure a trade here, I'd be utilizing this 814 area, then 859 to 903 for intraday trades higher. Could this easily return to the 200? Yeah. I think people are absolutely moronic that think this thing's going to the moon again. This thing will probably unravel and declare bankruptcy, but it's still tradable. So it's not, you can even trade ARK. You can look, I think Tesla's going boatloads lower, but look, I have a double bottom set up on Tesla. Can it still be traded? Yeah. So lots of stuff that I think is garbage that's going down. Not like something else. Not that this is garbage, but this is an insanely overvalued company. But is it tradable even to the long side for short-term trades? Yeah. Would I want to own it in a core portfolio that sits there and I'm going to go to sleep and just, call it a day with NVIDIA? No. But it's definitely tradable, even though it's way, way overvalued. I mean, PDE 67.75 right now. Come on, man. But let's say there's a long trade. We still technically can hit higher prices before this thing falls. There's trades set up, potential setups here. So might hate the long-term ownership, but a short-term trade, they're two different things. Now, if something's completely on the verge of bankruptcy, that's a whole nother story. Meaning on the verge of bankruptcy, because now you have something else that is macro. And generally, companies on the verge of bankruptcy, I don't want to trade from the long side. You're welcome, Rams of Fall. I was just referring to your dislike of junk stocks that are gamifying the markets and bankrupting. Well, I agree. But maybe some foolish traders can, if it's a valid setup, you know. Yeah, it's AMC. I mean, let's just see into the open. And not much going on. Be prepared for sharp and sudden reversals. Tick very bullish off the open. So, but I'd be, again, surprised to see a lot of follow through. So far, no follow through on the futures. Yeah. See, here's another example. Just want to show something. No. All right, so that's about your only thing going into the open is you got this little that already hit the stop. That might have stopped it out, actually. Yep, that's done. After hitting the first stop reduction target. So there's not much going in the open. Fridays, especially option expiration Fridays. All right, I'm gonna see everybody this afternoon. Everyone have a safe Friday trading. My advice is don't force anything. By the way, daily cycles should be getting back to the bottom beginning of next week, so we could then see another push higher, which is interesting. Just glancing at something on the macro, because we still have weekly cycles at the top and the daily cycles are cycling back down. So we could still see another push higher, and then we get top again. Interesting setup, post-Thanksgiving potential. With that, I shall see everybody this afternoon. Have a great trading day. Bye.